Good morning, everybody. Welcome to the room. Good to have you, the VWAP wizard. Good morning, Ron. It's good to see you. Hope everybody's doing well today. Hope you guys are ready to, I don't know, learn, I suppose. That's what we do in here, right? It's an educational room. Guys, I have no intention, desire, or ability to call trades in this room. If I take a trade live in front of you, it's because I'm using it as an educational tool in order to show you what it looks like when rules are met, or maybe even if the rules are not met. And we're going to answer questions. Don, I'm going to read yours right now, but that's my disclaimer. You say you're looking for a target 1 and target 2. Man, that's got to be up to you, right? You've got to make your decisions on where you want to get paid. You may choose to take some off at trouble. You may choose to take some off at later trouble. Don, I want you to use this picture right here. Good morning, Cav. So Don, the picture that I just dropped in the room discusses the relationship of price next to the small triggers on the large chart. You can use that to have an idea of how aggressive or how passive you may need to be in management. We'll talk about that today. From the 15-minute chart, does the current 15-minute bar state red, green? Nope. Color has nothing to do with it, not at all. Do I need to be concerned with the chart background color on either chart? Nope, has absolutely nothing to do with the rules, Don. If you're really just following the rules and your whole goal is to be very literal, if you will, on the rules, you don't need large triggers on the large chart. They don't do anything but create distraction, and that's actually what creates the color on the background. You don't need colors on the bars on the large chart. I have been known in the past to make these gray just to prove that point. You don't need background colors, bar colors. You don't need large triggers. There is so much on the chart that doesn't play into the plan, Don. I'll leave this one up because I know that you're looking at it. Close some stuff out here. And if you look at my workspace, it doesn't have those large triggers. It doesn't have that background color. And it may on the smaller, faster chart. I'm not sure if it does or not, but it still doesn't play in. Good questions. But we'll talk about using the relationship versus the small triggers on the large chart to have an idea of how to manage. Yeah, I do have the colors on my small chart. You can use that if you're taking HVA trades to make sure that your small triggers are in the correct position. We can talk about that. Good stuff. Where are we? We're checking news, guys. Forexfactory.com. And then, Don, when we get to the feedback section, brother, I will look at your chart and we'll go a little further in depth. Please scrutinize closely. I love that. Cool. If you want to get rid of some of the noise, hold on, let me do this for you real quick. If you want to get rid of some of the noise, man, go ahead and drop that into your workspaces folder from NinjaTrader 8, and that'll get all that large chart nonsense off of there that you just don't need. I call it nonsense because I'm easily distracted. It's one of the things that I do, guys, when I try to teach in this room is I try to give you as little as possible. And I know that that sounds silly, right? Why on earth would he give me as little as possible? Because this classroom is designed to the path of least resistance to get you where you want to be. And there's so much you can do with the software. There's so many trades you could build a checklist for. I don't give you all those options. I give you the best options. I give you the easiest to learn options. I give you the options that you can prove win more than they lose. Because at the end of the day, that's really all that matters. Guys, this is forexfactory.com/calendar. This is high impact news. Today is Wednesday, March 4th. We made it through ADP non-farm. We have ISM services PMI at 10 a.m. If you are in the funding company, if you are trading a Nexgen Pro Trader semi-live account and you trade a minute before till a minute after, you will be terminated. You will lose your account. You will not get any of your profits. You will not be eligible for payout. Guys, it is one of the most ridiculous reasons to lose an account. We lost 5 this morning. 5 accounts, 5 semi-live accounts. They did the work. They passed the evaluations. Some of them were in the money, getting close to payouts, and those accounts are no more. And we do that because the market can become unpredictable, because it can spike and jump. And guys, if we're copying your trades and you're trading during the most asinine moments of the day, that's not smart trading. So guys, always know where it's at. 10 a.m. Someone in here will remind us. There's no doubt in my mind. We are going to talk about Ninja Trader. We're going to talk about TradingView. Let me get it off of that 1 minute chart and put it on a chart that we're actually going to talk about. And this is 100% for education, my friends. So let's, without further ado, get to TradingView. This class feels like a lecture for the first hour. It is intended to be a discussion. If you have questions during the course of the class, when I'm going over rules, just interrupt me. We'll be fine. But we're going to get going, guys. TradingView. We're going to learn to read the charts. I'm only going to talk about a trend trade. That's it. Just a trend trade. I'm not going to talk about momentum trades. I'm not going to throw HVA trades out there. We're going to keep it really simple, guys, and we're going to learn these simple rules. Now, one thing I did, and I dropped all these plans in the room for you already, is I changed the name. I'm getting rid of the KISS plan. It's just the new user plan. I used KISS forever to try and remind people to keep it simple. I'm just going to say, hey, you know what? If you're new, here you go. You can still call it the KISS plan. I'll know what you're talking about. This plan tells you where to find your rules, how to read that chart, what it looks like to take the trade, and I updated this plan with pictures, guys, straight from the PowerPoint that I'm going to teach. As you go through each item on the checklist, guys, there is a picture going with it showing you exactly what it looks like to have your rules met. There's the momentum trade, and then I added the HVA trade even too, because a lot of you guys are taking it and breaking the rules. I figured I would give you a checklist. So that's in the room. Learn the rules. Start with a high probability trend trade, guys. Simulate, practice, make mistakes. Throw those pictures in the room and say, Mark, am I doing it right? You get a private session with me every time you post and ask for help. I have never refused help to anybody. I've tough loved a couple of you. If you keep posting in the room and you're going nuts, we're going to talk about it. But guys, post in the room. Get the feedback. Your trading doesn't affect my quality of life. Whether you win or lose, I'm still going to pay my rent, and I'm still going to eat steak twice a week. The education is for you. The feedback is for you. The critique is for you. And if I say, hey, guess what? You're getting lucky fighting everything on God's green earth, I'm not doing it to scold you. I'm doing it to say, hey, in the long run, this probably isn't going to work out for you, but ultimately you have to make those decisions. The trades that I teach are patterns. That's it. Learn what they look like so that you can always take the right trades. And the pattern for TradingView is establish a trend, wait for a fight, resume the trend. That's the most basic trend trade that we could ever teach. The concept is nothing new. It's not something that Nexgen came up with last year to teach you. The exact same concept. Establish a trend. Wait for a fight. Define your entry. Resume the trend. Guys, this is from the 2004. 2004 trading plan using minute bars, believe it or not. So that's what we're going to learn. This is what we're going to focus on. You guys do whatever you want. But this is the one that I teach because this is the one that you guys have proven typically wins about 75% of the time. It takes two charts to define a trend trade using this methodology, using the plan that I dropped in the room. It takes a 15-minute chart first. It's a very big, slow chart. It'll define direction, momentums, key targets, and terminations. There is a 1-minute chart. It's a faster chart, 15 times faster if you're good at math. And this defines the immediate strength of the market, and it'll define your entry points. We're going to use trigger lines on both charts. Don, you'll notice that my large chart only uses the small triggers. It's all I need to define this trade. It's all I need to define a momentum trade. Hell, it's all I need to define an HVA trade. No reason to put that distraction on there. Your small chart will use both small and large triggers. Smalls are smaller, large are larger. Pretty cool, right? These will define momentum. Guys, you have to have both sets to do an HVA trade. You have to have both sets to do a momentum trade. But if all you're doing is focusing on the trend trade, get rid of the large triggers. You don't need them. They're just a distraction. We're also going to use areas. Areas all have names. There are one-to-ones, pink and magenta dots. There are divergence highs, magenta and cyan lines where there's a loss of momentum. You're going to see outer bands. You're going to see a mid band. And the one thing that I need you guys to remember is that any line on your chart, any area on your chart can create a bounce. That 1-minute area stopped and halted forward progress all the way down to the lower area that appears to be stopping and halting progress. Lines on a chart can create a bounce. Is everybody good with that? That's the easiest way to use the areas. Don't trade directly into them. They could stop the market. So let's go through the trend trade, guys. A trend trade is 3 rules on those 2 charts, and it begins with defining the trend. I'm going to slow it down now that we get into the rules. If you're on day 1, let me know if you need help. So a trend trade. A trade that you guys in the room have told me wins more than it loses. A trade that you guys in the room have told me has been more than enough to pass your evaluations and begin putting money in your semi-life funded accounts. This is what you guys are telling me. It starts with defining a trend. On your big chart, that big slow honking chart, you'll notice that there are no background colors. There are no large triggers. You're going to use the small triggers to define your trend. If the small triggers are up, we're in an uptrend, you're only looking for rules to be met for long trades. That means buying the market. If the triggers are down, we're in a downtrend. You're only looking for short trades to sell the market. And if you can't tell, if you're just not sure when you look at that large chart, if those triggers want to go up or down, if it looks like they're trailing to the right, if it's about to possibly pinch and turn up but hasn't, guys, if you can't define the trend easily, instantly, you may not have a trend to trade. It's okay to relax. So it's either up or it's down. Left to right produces no advantage. Without the advantage, we sit on our hands. That's that 90%. Once you define the trend, your first 2 rules are exactly the same. Not trading directly into areas. We start with a 15-minute because we won't ever get off the 15-minute chart and go to the small chart if it's trading directly into areas. So when you define the trend, you're just going to look at wherever the market is and you're going to say, do I have room to targets? Do I have room to an area? Do I have room to make money? So the triggers are up and currently the market is inside of trouble, which means there is absolutely no room. Can you guys give me a why if that makes sense? This is rule number 1, not true. This is rule number 1 saying, hey, either let it break away or roll back down, but there's just nothing to do right now, no matter what your opinion says. So there's your room to targets, and then we just saw a live example, but it looks like this, guys. There's got to be room to make money. And if an area can create a bounce, you want to make sure that there's enough distance to that area before you enter a trade. Rule number 2 is that the 1 minute is not trading directly into areas. And guys, rule number 2 is a conjoined twin with rule number 3. You're going to have to be able to define your entry to make sure that there's room. You're going to have to know the entry rules and where you'll be entering, and then you're just going to have to say, man, I sure hope there's nothing in the way. So we're going to talk about entry, and then we're gonna make sure that from that entry there's a clear path. This is your long entry. When the large chart is up, and when there is room to trouble, you'll turn your attention to the smaller chart. And you're going to see the small triggers roll down when the large chart says up. If you do not see those small triggers turn against you, then you do not have a trend trade. And it's almost too easy. This is the beginning of the fight. And if they never fight, it's not a trend trade. But once the small triggers roll, initiating the pullback, the fight, you're going to turn your attention to whatever area is lower, whether it is a mid band, whether it is one-to-ones, whether it is that zone. And you're going to say to myself, my rules tell me that the market must pull back to the area. Not near the area, not halfway to the area, but the market literally needs to come back and smack into an area. And when it does, we don't just jump in, because the small triggers against us is the immediate strength of the market. It is the giddy up in the now. It's that thing that we just don't want to fight, because we'll lose more than we win when we fight it. So your entry is an up bar. It's a bar that's going up, that finishes, that closes, that is no longer an active bar. And both corners of that bar must be above the small triggers. This puts you on what we call the weak side of the small triggers, and this is where your 1-minute chart is most likely to bounce and continue in the direction of the large chart trend. For a short trade, the triggers are down. On the large chart, there is room to trouble. The prevailing trend is nothing but down. As soon as the small triggers roll up, let's do something that you can actually see. As soon as the small triggers roll up, the fight is on. And the fight must be taken all the way to an area. And when you reach the area, here, we'll make the fight a different color. When you reach the area, a down bar that finishes, closes below those small triggers on the weak side of the triggers, that is where the trend is most likely to resume. That is where the small chart reverses and goes in the direction of the large chart advantages. So it is trend. It is fight, defined by the small triggers rolling against the trend. It is a pullback to an area, and it is continuation of the trend, hopefully. There will be times where you get a close below the small triggers before the area is reached. Is it a fight? Absolutely, it's a fight. But guess what? It's not the fight that you signed up for. Your rules say it must go to an area. You're going to learn to ignore these little fluctuations on the way to the perfect area. And guys, that is your short trade. That is your long trade. Your entry will look the same every time. Trend, fight, close above the triggers. Trend, fight, close below the triggers. Could you guys give me a why in the room if you're following, if you're with me? If it seems too damn simple to be effective, that's what most people say. There's not nearly enough moving parts, Mark. When do the rest of the rules show up? They don't. Here's how rule number 2 works out, though. Trend, fight, entry. Now that you can define an entry, all you have to do is say, hey, there's nothing in the way. There's not a mid-band right in the way. There's not one-to-ones right in the way. There's not a zone in the way, a divergence low in the way. It's just clear sailing to the first thing that could create a bounce. This is the most broken rule because new users hate to not be in the market. New users would rather trade directly into an area, rub their lucky rabbit's foot, say a little prayer, and hope that that area magically breaks. Guys, the methodology is designed to give you clear sailing. It doesn't mean that the trade's going to win, but at least it means you're not trading into something that's more likely to make it lose. And guys, that's your trend trade. And I wish it was more difficult, but it's really not. To find the trend, wait for the fight, take the perfect entry, and just don't trade in anything. Make sure you've got room to make money. Are there any questions about that? Now we're going to look at a couple pictures of what it looks like. The trend is up. This is like in the moment before you ever enter. The trend is up, and there is room to trouble. I can go to my smaller chart, and it's way up here, and the fear of missing out is gripping me. And I'm like, oh, I'm never going to make money, and I hate Mark Novak, and Nexgen is stupid. I've said it. But you have a methodology that you can prove wins more than it loses. And we're just going to patiently wait for the fight, for the triggers to roll down. And before that ever even happens, you already know where your areas are. You have literally called your shot before the fight ever even started. You know exactly where your trade needs to come from. You know right where your advantage lies. Now, the hardest thing you'll ever do is nothing between this point and that point. That is where you're going to have to learn to discipline yourself. The triggers are up. There's room to trouble. There's your roll. Can you sit still until it gets to your perfect entry? Can you sit on your hands? Can you do nothing? Can you not choose to get excited and trade directly into an area because you're afraid it's going to go without you? That will be the most difficult thing that you ever do as a trader. But what you're going to find is that knowing where your trade comes from in advance, knowing exactly what you have to see, it creates a calm. And there's this mellow. And you really get to a point where you're like, okay, the triggers are down. There's room to that green area. And even though we're all the way down here, I've done enough study, I've watched enough people post it in the room that I know where my trade comes from. And guys, we did this one live in the room, where we called our shot 10 minutes before we ever got an entry. And sure enough, the market came right back to the place where we drew the box, and it closed below the small triggers. And because there was room down to the large chart, that's exactly where we got paid. 25, 5, 61.50 after getting in at 09, which, guys, that is almost a 30-point trade. That is almost 600 per contract. And if you got in early, you got run over, right? And if you said, oh, there's a reversal bar, you got run over. And if you didn't wait for the area, you got run over. But when it gets there and closes on the weak side of those triggers, guys, it is like all the happiness in the world. That's your high probability trend trade. Are there any questions? From where I'm sitting, it feels very straightforward. If you're brand new, it may feel a little confusing in the beginning, and that's okay. It's okay to be a little confused. It's okay to not have all the answers. It's okay to go, what the hell did he just talk about? Because, guys, you're brand new. Give yourself a little bit of grace. One of the things that you'll find is, as a brand new user, it feels a little bit like this, doesn't it, Lucy? Feels a little bit like this. Feels like there's a lot coming at you. If you just keep it simple, if you say to yourself, you know what, I know there's a million opportunities outside of this trend trade, but I'm going to learn this one. I'm going to learn this pattern. I'm going to focus on always having room. I'm going to learn to be patient and wait for the fight. It takes a lot of the stress out of it. And then, Lucy, are you at the point yet where you're starting to see other things around that trend trade, where you're starting to see patterns kind of pop off and you're like, whoa, I'm always waiting for the trend trade, but I'm noticing some stuff on the sidelines? That's kind of how traders progress. That's why we need checklists. Yeah. So let's talk about stops real quick. All we've talked about so far is a great entry, an awesome entry, a provable entry, a testable entry, a pattern that repeats itself all the time. So what does it mean to be in an uptrend? It means that the buyers are in control. It means that the men and women that control the market want it to go up, and we are choosing to go up with it. I love that, Lucy. And that's the challenge, to begin to see more and realize that what you see may not be your rules. So with the buyers in control, and it seems counterintuitive, we want sellers to come on the scene. We want them to show up. We want brass knuckles and blackjacks, and we want them to fight. And that seller's fight is what's going to get you guys to your beautiful entries. And you'll be able to see the exact tick where those sellers fail. That's going to be the pivot low. Is everybody comfortable with the idea of a pivot? When the market goes up and then heads down, that's a pivot high. When the market comes down and goes up, that's a pivot low. A pivot just means the market turned. It means that whoever was pushing it down failed in the moment. We're going to use that pivot low when the buyers are back in control for stop placement. And we're going to call this where the market should not go. And if the fight happens and the big chart takes back over, the market shouldn't go back above that pivot. If this is going to be a winner, we don't want to see the buyers fight again, because if the buyers fight again, they may push way beyond. So we're going to activate a stop just above the pivot high, just below the pivot low. Now, I had an amazing human being send me a message this morning, and I want you to see something, because this is kind of what happens as a brand new user. Is you say, my stop is 24 ticks. My stop is 24 ticks. And because it's 24 ticks, I got stopped out of the trade. Does everybody see it? The trend, the fight and failure, and the resumption. That was her entry. Now look where she was stopped out, or he was stopped out. I'm not trying to give anybody up here. And look what the market did after. It never took out that low pivot. It did ultimately, and when they did, they absolutely railed to the downside. So guys, the idea that stops are not a number. Stops are not a intestinal fortitude where you can handle taking a loss. Stops are literally where the market should not go if it's going to be a winner. You know it because your rules put you in on the good side of it. And guys, you've got to learn to trust it. You've got to learn to accept it. If you take a trade and you're not cool with the risk, that's on you. It is your right. You are in control to simply not take the trade. In times of huge volatility, you may have $1,000 worth of risk on a trend trade. And you might just say to yourself, yeah, not today. I'm going to go fishing, right? So is everybody good with stops? Above the pivot high, below the pivot low, guys. It's really that simple. And now we're going to talk about support and resistance. When a market is moving up, areas reached are resistance. Short trades come from an area of resistance. Selling the market happens at areas of resistance. When the market is coming down, areas reached are support. Long trades originate at areas of support. When you buy the market, you buy because of a close above the small triggers at the area of support. It's important that you understand that. These areas change their role. Resistance can become support, and support can become resistance, guys. So when the market comes up and it reaches an area of resistance, you're at the perfect spot for a short trade. Until an entire bar, where the full body of the bar, the thick part, the four corners, that bar finishes, the timer is done, and all four corners are above resistance. Resistance becomes support. It is no longer resistance. It is no longer a valid spot for a short trade. And you can see that support holds the market. When a full body of a bar, all four corners, finishes below an area of support, support becomes resistance. So if you were looking for the long trade, that area is off the table. to initiate a long trade. It's now resistance. You can see that resistance holds and pushes down to support. Pretty cool, right? Guys, this is like clockwork. This happens all the time. The market comes down and hits support because a full body of a bar prints below that area of support. We are now working with an area of resistance. Does that make sense? That's it, live in the moment. Here at support, full body breaks, support becomes resistance. It is now on the table for a short trade if your rules are met. And look how it bounces. Market pulls back to support, and then it goes to resistance, and it pulls all the way to the midband, retests resistance, hits support, area is still resistance, and now this area that has held a support multiple times has become resistance. And now your triggers are rolling down, and now your path is clear. And I wonder what would happen if we got a pullback to an area of resistance with a close below the small triggers. Well, that might just be a wonderful thing, should they choose to do it. There's your pullback to resistance. Man, must be market open. Yeah, 9:30. There you go. Market just opened. Good morning, Miss Cindy. Some of you choose not to trade the open. That's why. That was kind of fun to watch. So the biggest mistakes I see with support and resistance, guys, are believing that a close above an area of resistance is a safe path to the next area. This is what we call a prairie dog. And you never get a full bar above resistance. Resistance doesn't change to support. And if you're entering long trades from an area of resistance, you are more likely to lose that trade. Can you guys give me a why if that makes sense? A close above does not change the roll. A full body above changes the roll. This is not a long trade, and this is going to be one of those ones that you're going to lose more than you win, but you're going to win just enough to believe you're a genius until your account is empty. The second is when price action begins to move below that area of support. In the moment, everything looked like this market was going down, and if you were excited about jumping in and taking a short trade, you got absolutely slaughtered because support never became resistance. These are two of the biggest mistakes made by new users. Take a minute to make sure that you learn that little recipe. And then finally, guys, the quickest way to get to where you want to be is to ask for help. I can't force you to. I won't beg you to. But if you really want to learn this methodology and you want to learn it fast, there are things you need to write on the chart, because every time you see something, small triggers down, it has to mean something to you. There has to be a correlation between what you see and what it means. And that's exactly what we did here. Small triggers are down. It means my rules say only shorts. I'm going to write that on every chart every time until it is 100% second nature. Room to targets. It means I have room to make money. I want to see this look, and I want to see the targets, and I want to say, man, there is available cash. Now, Don O, we're going to talk about this price on the strong side of the triggers. This look may produce bigger moves, but be aware of 1 minute areas. Think one runner. That's what the strong side of the triggers means to me. And guys, what that is when you define the trend, look at where the most current price is in relationship to those triggers. Is it left of the triggers? Here it is highlighted. Is it right of the triggers? Is it inside of the triggers? If you are left of the triggers, see how it's down and we're left? That's the strong side. That's where 1 minute areas have a better chance of breaking. They're not gonna just arbitrarily break all the time for you. You have to be aware of them. You're still following rules. But when there was room to it and you get there, you may choose to just go break even and see what happens. If you're on the right side of the triggers, that's that weak side. This is where reversals come from. I'm still looking for long trades, but I'm probably getting paid directly at the area. The first sign of trouble, I'm taking them all off and I'm just waiting for the next trade. If I'm in transition, not really strong or weak, kind of in the middle, guys, you can go from weak to transition to strong in one bar and vice versa. This is where partials make sense. This is where maybe taking half at the area, allowing the other half to have the ability to run. So Don, when you asked me earlier about profit targets, this will give you an idea before you ever enter the trade on how you want to manage that trade. Pretty cool, right? So include it on your chart. Talk about what you were going to do before you ever do it. And then I really do encourage you guys, entries are where the patience come in. Take the time. Small triggers rolled up. So I need a pullback to an area, then a down bar that closes below the small triggers with room to trouble. I kid you not. If you type that out on 10, 15, 20 trades, you'll never wonder where your entry's coming from. You'll never wonder what it takes to initiate it. And notice that the bar that closes below, the entry's not till the next bar because I let the timer hit 0. I assured that my rules were met. You can see that money was taken at trouble because trouble can create bounces. And then because it's the strong side, looking for that bigger move. If you do that every time, you're going to learn your rules faster. And the second thing that it does for you is when you present that trade in the room. When you say, hey, Mark, this is what I saw. The small triggers were up and my rules say only long. And price is on the strong side of the triggers, and this may produce bigger moves. But for now, my goal is to recognize and take proper entries. I love this. Plenty of room. The next area is greater than 500 points away. I have room to make money. Small triggers rolled down, so I need a pull back to an area. That's the mid band. Then an up bar that closes above the small triggers with room to trouble. And guys, Dono, and Don, great job on this. Dono just did everything that I asked Dono to do. Dono, what did it take to annotate this chart? A minute and a half? Maybe? 2 minutes if you type slow? Does it help to actually write out what it means to you? Does it help you make sure that you don't enter before the area, right? Guys, I'm telling you right now, I've given you the keys to the kingdom. You now have the golden goose. Your job is to not turn it into fried chicken. Are there any questions? Don, this is so good. We'll hit the other one when we do feedback. Are there any questions about the trend trade? Look at that spike. Holy smokes. The triggers are still down. There was a pullback to resistance, but when you finally got a close below, there was just no room. We're going to wait a minute. Million trades, billions of dollars traded daily. All right, guys, now we're going to go to NinjaTrader. And again, I'm going to go a little slower. Everybody in here that has NinjaTrader, you guys have had this thing for 10 years. Maybe not 10 years. I think everybody in the room that I'm looking at has had NinjaTrader long enough that you probably don't need a 101. So I'm going to just do it this way. Guys, there are things that we're going to look for on NinjaTrader, and it's the exact same thing that we just talked about on TradingView. The whole methodology, the whole idea, you've had it 10 years. Establish a trend, define a fight, exactly where the fight's about to be lost, resume the trend. Guys, this is a pattern that is predictable. This is a pattern that is testable. This is a pattern with only 3 rules on only 2 charts using areas and triggers. 3 rules, guys. The first one is strong triggers. Separation between the small and large. All the colors match. That's it. That's the whole rule. This is the advantage of momentum. This is a market when there is separation between the small and large that's going to be difficult to stop. And there it is right there in a live market. When the smalls are below the large, when there's space, ladies and gentlemen, this market will be difficult to stop. It has a ton of push behind it. If there is no space, there is no push. The advantage isn't there. It's okay to sit on your hands and do nothing. Once you have momentum, you have to make sure you have a clear path. Some of you may remember from 12 minutes ago, trading directly into areas tends to produce a lot of losers. Trading directly into areas doesn't give you room to make money. A lot of you will do it anyway. That's your right. But if you're brand new and you want the highest chance of success, you've got to learn this one little phrase. When price reaches an area and none of the triggers break it, it's a termination condition. It could stop the market, create an untradeable bounce. It could reverse the market completely. I never know what it's going to do. So rule number 2 says, hey, don't take the trade. If you reach a line and all 4 triggers remain below resistance, above support, that line is a termination condition. Absolutely no trades are initiated into it, not from a bounce saying that you have room. That area must either break or that area must roll and reverse the market completely and send you the other directions until your rules are met. Are you guys good with that? Price reaches a line, just like it did right there. And if none of the triggers break, this happens more than it doesn't. That's it. That's all it is. Price pulls back to support. None of the triggers broke. Price reached yellow 1-to-1s. None of the triggers broke. Look at that big, ugly, untradeable bounce. There it is at resistance. There it is at support. There it is at a resistance high. There it is at a resistance low. Guys, you have a magic freaking 8 ball. And now you know exactly where the market may bounce, where it may reverse, or where it needs to break before you have the next trade. And all you have to do is count triggers. And guys, I know that I'm going a little quick on this one, but I want some live market stuff. I want to read your charts. I want to do it in the moment. If you need a slower version, of these rules for either time frame or for either platform, there it is. Exactly what I just said over the course of an hour both. We're going to go quick this morning. We're going to get to live markets. We're going to have some fun watching things. No triggers, no trade. Learn that phrase. 2 triggers with momentum means that that area could break, but it's not a good look. And on the plan that I gave you, there's a way to capitalize on the potential to break, but it takes 3 of the 4. 3 of the 4 triggers must be through the area. This is your best look for a potential breakout. 2s tend to lose more than they win. 3, if you're following a plan that embraces momentum, has a higher chance of breaking. 4 triggers through the area, that's your clear path. And with all that momentum, you're going to go pinpoint the fight. So no triggers, no trade. 2 triggers, sit on your hands. 3 triggers, let's take it, manage it assertively if the rules are met. 4 triggers, holy shit, life is good. With all that momentum, it is a steam train to giddy up. 2 ways to establish a clear path. From an area breaking, we call that a breakout of Fibonacci. From a reversal, where the market, everything changes color, changes direction, gives you the rules met. Breakout, 4 triggers get through. Reversal, everything rolls and goes the other direction. The easiest trades that you will ever take. The highest probability trades that you will ever take. The trade that you will be able to prove wins more than it loses if you just follow the rules happens with momentum and path. And without momentum and path, you could never say you're in a high probability trend trade, which means that without momentum and path, you could never say this is a trade that typically wins 70 to 80% of the time. The recipe for the perfect trade is momentum plus path, rules 1 and 2 met without question, and then defining your entry. Being so precise that you'll use a limit order. Literally wait for the market to come to you. And you'll use that limit order to buy or sell a pullback, that fight that happens against the underlying trend. It's going to start with a reversal bar. You're going to do it at an area, at a fib, at a midband, at a yellow 1-to-1, because areas are bouncy. And that area must be inside of large triggers, because large triggers are going to show you where the pullback is most likely to go. Areas within those triggers are going to show you where it's most likely to bounce and continue with the trend. Now, this is the difference between NinjaTrader and TradingView. TradingView says wait for a close above the small triggers. NinjaTrader is a different bar setup. You're literally going to pull the trigger at the area inside the triggers. So when the large chart says up, and when the large chart has a clear path, the fight begins with a reversal bar. When the reversal bar prints, you'll look to these large triggers, large and synthetic. And the large triggers, smooth, are native to the 5-1. And the synthetic triggers, stepped, are just the large triggers from the large chart. These two work together to show you exactly where the retracement is most likely to go. Somewhere from the top line to the bottom line. One is not more important than the other. But it's the areas within, fibs, midbands, yellow 1-to-1s. That's where the market is most likely to bounce and continue in the direction of the trend. It could be the highest level. It could be the lowest level. The market may even choose to retrace all the way down to the bottom of the retracement zone. This is where the advantage of rule number 3 is in place. Because new users tend to miss trades, trying to not go into negative equity, they'll put their entries where the market may not ever make it. Your entry comes from just above, a limit order waiting, just above the highest point of support inside of triggers. And as long as it is above the bottom of those triggers, the good stuff is happening. 5 ticks below those triggers is where the market should not go. Where the market should not go is the equivalent of that pivot low on TradingView. This is where the advantage of rule number 3 is no longer in play. Entries, per the plan that you've been given, do not come from the wrong side of the triggers. Once you get below those triggers, you don't know if, when, or where that market may continue up. Once you get to the wrong side of those triggers, you don't know if, when, or where that market may continue up. Once you get below those triggers, you just don't know. So define your entry. Understand that the reversal bar begins the pullback. It's not. It is not your entry. The area inside of triggers is where your entry will come from. Any lines beyond the triggers are to be ignored for the brand new user. Once you get beyond them, you simply don't know if, when, or where that market's going to continue down. This is where the advantage of rule number 3 is lost. This is where initial stops, per the plan, will be placed. And guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. You can keep those risks small. Now, if you start saying stuff like, oh, I'll take that entry, but I'll just give it an extra $200, $300, $400 worth of risk, it'll never get there. They have cameras behind you. They're going to go hit your stop, and then they're going to run just to piss you off. So what you're doing is you're learning a pattern. It starts with defining the trend. The background is green, the trend is up. It's making sure that you have the advantage of momentum, and all of this happens on that first bar. The advantage of momentum, the room to targets, clearing and breaking through the previous areas. All of this happens on the first bar. And guys, the market is trading way up here. That's where the reversal bar comes in. The reversal bar is the fight that always seems to happen. And when the fight starts, you know exactly where it's most likely to be lost, at the area inside of triggers. Initial stops are placed where the market should not go. So by waiting for the pullback to an area inside of triggers, learn that phrase, you'll have the least amount of risk. By waiting for the pullback to the area inside of triggers, it looks like a tail on the large chart, you'll have the most room to trouble. Pretty cool, right? So when you annotate and post in my room, if you're learning the software, define the momentum and use the phrase. Smalls below the large, colors match, they're strong. Rule number 1 met. Rule number 2, define it. Price has not reached support. 3 triggers through the previous area. This is only the potential. Manage a bit more assertively. Define your entry, guys. If you give me good information when you post in the room, I can give you quality feedback. Our current read. The trend is up. The large and small do not match. I do not have momentum. I'm done. I'm just not looking for anything else. That's how quick your reads will happen. Does everybody see that Fibonacci resistance stopped the market to the tick? Pretty cool, right? You knew about it since 9:30 in the morning. It didn't get there. Well, you only had about 3 or 4 minutes. Looks like it got up there pretty quick, huh? Let's look at the S&P. Holy smokes, only 2 triggers through 1-to-1s. No areas inside of triggers. What an amazing way to avoid a loser. And now we've got momentum down. And we've got room to that horizontal line that could stop the market. And I could literally just activate a limit order. And if they don't hit that blue line, well, they did. That's where my entry would have come from. Pretty cool, right? That's how fast your read happens. 2 triggers through with momentum. Not my best look. I choose not to take it. In order to have my rules met per the plan that was given, 3 triggers must get below that divergence low. And until that happens, there's nothing for me to do. There's no long trades to be had. There's no short trades to be had. There's simply nothing to do. I'm in my 90%. Guys, the futures markets trade billions hourly. Or, yeah, actually it is. It's billions hourly. The S&P trades billions daily. I want you to see how much this market has moved since it opened at midnight. That's a lot, isn't it? You guys have to find a way to make $400 or $500 a day. Somewhere in all of this, you're going to find $400 to $500. You're going to wait for momentum. You're going to have a clear path. Let's go see what that tail looks like on a smaller, faster chart when the rules are met on the large chart. And you're going to be able to take a pullback to an area inside of triggers. And I'll be good gosh darned, it went all the way to Fibonacci resistance, or support, excuse me. Pretty cool, right? Guys, that happened 6 minutes ago. 6 minutes ago, you got the perfect trade. Any questions? Awesome. Let's start looking at your charts, guys. But you know what? Before we look at charts, I'm going to share something with you. I feel compelled to do this. Everything I teach, guys, the key to everything that we do in this room is having a foundation. Is understanding the basics, and then each day and week compounding a bit. I am not here to shackle you to one trade. I am not here to demand that you don't look for other opportunities. But I'm going to tell you right now, if you can't make money with the most simple approach, you're going to struggle making money with a more difficult approach. So for you new users, I blanket you with very conservative rules, recognition of advantages. I hand you a solid plan that optimizes your chance of success as you learn to read your indicators. So for new users, all termination conditions are bad. And areas beyond triggers for entry are bad. And no momentum is bad. Shame on you. Finger wag, right? But guys, the honest truth is they're not always bad. There are times where the trade still makes sense if it's in your plan. But these blanket rules are there to put you in a position to win more than you lose. So if you're taking trades And you're saying to yourself, whoops, this one, I'm not winning more than I lose yet. You're probably not following the plan. You should be posting in the room and asking for feedback. And then, the more time you spend with the software, the more you see. It doesn't mean that you break your rules. It means that you start taking notes, you start taking pictures, you start to realize, yes, there is more outside of this. But the reality is, and guys, is there anyone in the room that doesn't think they could reach their daily goals using the KISS plan, the simple plan, the first plan? If you don't think you can, something's not right. And if you don't know that you can, it means that you've never taken the time to keep it simple. We had a young man in the room yesterday said he's winning 70% of his trades with the KISS plan. Both medium probability, 50-50 trades, and high probability. And he's in positive equity. And his trading has become stress-free. You've got to learn the process that yields the results. The results seem to follow. That's where the plan comes in, guys. If you keep it that basic, if you follow simple rules, if you're okay not looking for all the trades, only the best trades, you can find an extraordinary level of success. So as we move forward, it is imperative that you guys remember, I'm not the trade police. And it's imperative that you don't put yourself in a position to be the trade police. Trading is an individual sport. What is good for you may not be good for me. So as I go through and I look at your pictures, guys, what I'm going to do is I'm going to go back to the rules. I'm going to go back to momentum, path, and entry. If you're showing me NinjaTrader, I'm going to go back to direction and entry if you are on TradingView. If you don't need feedback on your trades, it's okay not to post them. I had this conversation with someone yesterday. Guys, if all you're doing is showing off, do me a favor, post one or two. Post one or two of your show-off trades. Don't post 38 of your show-off trades. If you don't need feedback, let's get to the live market. I'll leave you guys with this. I'll be back in just a moment. Go stretch your legs, and we will get into the second hour. Let's get at it. Let's do this. Here we go. First trade. The trend is up. The market is on the weak side of the triggers, and there is nothing but room to trouble. The market pulls all the way back to support, didn't break the one-to-ones. Closes above the triggers. Wayne waits for the close, you can tell. He's actually in pretty late. He says so. These zones were not present, so he holds the trade. When they produce a second fight and fail, Wayne uses that as a trailing stop. I love it. And he's out at trouble. And guys, that is a pretty outstanding trade. That is about $500 per contract on a 2-lot using the most basic methodology taught in this room. Good job, Wayne. No separation, so there is no momentum. Clear path, rule number 2 is met. No areas inside of triggers. 2 out of 3 rules are missing. 66% of the things that produce the perfect trade are no longer in play. Jen takes it anyway. Jen says, well, you know what? I'll catch it if they start to go down and see if they decide to go down. And the weird thing is they didn't. But Jen's experience allows her to make something out of nothing. Good job, Jen. All the momentum and nothing in the way. Cab takes a pullback to the area inside of triggers and rides the momentum down. And that is the perfect trend trade. That is the perfect trend trade. The 1-to-1's not a termination condition. Those are found over here. Guys, that is the ideal path of least resistance to get to where you want to be. Termination reverses the market. Separation provides momentum, room to hit trouble, and all he does is wait for a little fight to an area inside of triggers, and just perfect. Great trade, Cav. I could teach a class with that picture. And then sometimes it's not perfect. Don't have the momentum, but the path is clear. Don't have an area inside of triggers. And Cav says, F it, I'll just jump in at the triggers. And Cav, it works out this time. Without the momentum pushing the market, without an area to bounce from, yay you. Like, I'm glad this one worked. Once again, 2 out of 3 advantages missing. Guys, the market's going to give you this one enough to make you think that's your great trade. The market's going to give you this one enough to convince your brain through little dopamine shots that you don't really have to follow your rules, that you're smart enough to make money without them. And when I see this, I say, all right, I'm glad that you won. I hope you win more than you lose with that pattern. Weak bottom, triggers up. Pete jumps in with the momentum. I like it, just jumps in. And Pete knows that with this look here, momentum and path, the first 2 rules met. If this just jumping in for the fun of it trade doesn't work, very often it becomes a trend trade. And he just adds on. He says, heck yeah, I love a trend trade, but I'm willing to take this entry because they don't always go. He takes 3 off right at trouble, and he lets the last one run as long as it wants to run. Momentum and path, guys. Once you learn those 2 concepts, you begin to find more. Once again, it's momentum and path. All the way up here at 84. There's his jump in, hoping. Gets paid quick. It's just momentum. Perfect. Market pulls back to an area inside of triggers. When it fails with that look, it turns into one of these more often than it doesn't. Gets in just a little bit late. Still makes money. Gets out as it starts to push down. And then the last one, not a confirmation bar because the rules weren't met. And guys, it's really important that you guys know the difference. A confirmation bar is confirming that your rules were met, the market's heading that direction. By the time you take the confirmation bar, the momentum is gone. When you take the confirmation bar, it never made it to an area inside of triggers. 2 out of 3 are still missing. But Pete says, yeah, this market's going. I'll get in on the way up. I'll get paid quick. And without momentum pushing the market, I'll get out if something changes. Learning how to use the software a little differently through repetition. Once again, let's see where we're trading. We're up here around 21. There we go. All the momentum. Nothing in the way. Pete jumps in. That's the Pete entry. When it turns into a trend trade, he keeps it on. And look at this. The market never goes where it shouldn't. It never gets 5 ticks below those triggers. Only 2 divergences. So far, nothing has changed. It's that third divergence that can change. It's that third divergence that can stop a trend. And Pete says, you know what? I'm out break even. I can't sit through that. But you already sat through everything bad, and you jumped out when everything finally turned green and went up again. This is what happens on long holds. It's just mentally exhausting. And this is where we make exit mistakes. If you're going to hold through 3 divergences, large triggers going down, small triggers, odds favorable momentum going down, why jump ship there? I'm not sure what his rule is on that, but I'm glad you didn't lose anything. Triggers are up, and we're looking at 99, 73.99, which is down here. So Pete, can I address something for the room using your chart? Guys, entry rules are one part of trading. Taking the right entry is only, it's like the smallest part. Management is where money is made. And management means that you have an exact set of rules for exit. If I take this entry, I have a set of rules for exit. And it would appear that none of those exit conditions were met. And Pete holds his trade. And then we can assume that the exit conditions still weren't met. One of the things you guys can do is you can keep it very robotic. If I take this trade, this is how I'll manage it. And when you're taking the right trades, you'll be surprised at how things work out more often than they don't. So this is exhaustion. This is ditching the plan 100% and missing the spoils of the great read. And Pete's been around long enough. He knows that. But that's a good lesson for everybody. Let your management be as robotic as your entry. Take the emotion out, guys. Emotion F's up trading. Strong triggers. 3 triggers through. And then, guys, this is and he calls it a weak entry. He knows. If you're getting in below the triggers, this is an exit condition for Pete. And he decided to take an entry. So once again, guys, let it be robotic. And all this entry did is create an enormous amount of risk for 10 ticks. Taking the wrong entry creates an enormous amount of risk. He's in at 20, his stop's at 95. That's $250 per contract. If he just waits for the perfect entry, getting in at 09, guys, that is $110 extra risk. It's $110 less profit. Something to think about. If you're gonna change your rules in the moment, guys, change them for the better. No, Pete, you're good. There's the same entry, right? Triggers are up, 68.11. So we're right here, just before trouble. I like it. And Pete says, I'm going to try it. And then this is where he just got hornswoggled. He's like, I'm in the right spot. And they're like, nah, Pete, we're pulling back. And Pete's like, well, I have a plan that's pretty kick-ass. I'll just add on at the area inside of triggers. And sure enough, off it goes. Nicely done. Pete, that looked in the moment like it was going to be the perfect entry. And this is what you guys risk when you just jump in. I'm not saying don't just jump in. But I'm saying if you jump in with this look, it's a great look. Be prepared for the pullback if you're going to hold. Good job, Pete. They just got you on that one a little bit. 66, termination to termination. And when everything rolls down, and guys, this is pretty cool chart read. Pete says, I'm not going short into this area. I'm not going to try to go long into this area. But when all my indicators agree again and I start getting below that thing that could create a bounce, I'm going to jump in. And I'm going to get paid quick because it's not a high probability scenario. And if there's any sort of change, I'm going to get off. Going to get out. Great job, Pete. A lot of patience happening in that moment. A lot of do nothing. A lot of, and Pete, I guaranteed Pete was talking through how he's going to take a long or a short, and he was waiting for the market to give him one or the other. There's no doubt in my mind he wasn't married to the short any more than he was married to the long. He's got a list that says, if this happens, we'll go up with it. And if this happens, we'll go down with it. And Pete, great job, great patience. Two of the four triggers through from a strong bottom. There's a pullback to the area inside of triggers, and Pete gets in just a tick late. That's okay. Takes 10, gets off with a little awesome momentum. One of the things that you guys will notice, and Pete, you give so many charts that I can use these for great examples. One of the things that you guys will notice in your trading through repetition. And guys, one of the things that I'm hired on to Nexgen for is to recognize patterns. And you guys will, and Pete will recognize his own mistakes. Pete called that a weak entry. Do you guys see how the entry here is the exact same condition as the exit here? Most of us don't see that in the moment. Most of us don't play that out in our heads as it's happening. This is one of the things, guys, when you post in my room, I'll be able to say, hey, Pete, I noticed that your entry and your exits are looking the same. You broke the rules on one of these charts. And it's not, damn it, Pete, what are you doing? It's Pete saying, I need to make sure that I'm not entering when I'd be willing to end the trade. That's all it is. I'm making sure now, right? And the conversation happens, and it's just an awareness. And I'm not belittling Pete for taking this entry. I'm just saying, hey, Pete, did you notice that entry and that exit are exactly the same? And maybe you're getting comfortable and outside of your plan a little bit. And Pete's like, yeah, thanks, man. I appreciate it. And that's it. It's just consistency in trading. Strong triggers, room to trouble. Get in and get paid. I love this. I love this. And Pete, in the heat of battle, sometimes we miss it. It's just a part of it. It's a part of trading. If you say you follow your plan 100%, you are a rock star, because I still make mistakes. And that is such a good use of momentum and path. All right, triggers are down. I think it was over here. There was still room to trouble. There's a pullback to a mid-band. There's a close below the small triggers. And I'll be darned, there is 8.25 points right to trouble. Papa, is this you? Does everybody see it? The triggers are down. Absolutely. And in the moment, you're like, oh, he traded directly into trouble, but he didn't. Papa put some dotted lines on trouble and said, man, if I get my entry, and that is such a beautiful entry, I've got room to get there. And you'll notice 72.50, 72.50, guys, right at trouble. Papa says, my job is to get paid. My job is to put more money in the account than comes out. It's okay to get paid. And whatever happens next, doesn't matter. There's more coming. I love this trade, Papa. That is a textbook trend trade, as taught in the room for an entire hour. You guys want to see something cool too? He didn't enter directly into trouble because that didn't fit his rules. And his patience was rewarded to the tune of about 160 bucks. Awesome. Triggers are down, room to trouble. There's the pullback to resistance and the close below. There's the pullback to resistance and the close below. And then there's the pullback to nothing at all and just jumping in. Entered because of the fear of missing out. And because he broke his rules in the moment, He closed it out. He said, I know that I'm breaking my rules. Those are hard to manage, aren't they, Papa? Because then you're like, man, if this one loses, how stupid am I going to feel? Not that anyone in the room is stupid, but we have that little bit of self-shame. That would have been the one, right? It did everything the market said it was going to do. And this is the dang it, I missed my trade. I sure hope it goes down for me. And I'm glad you made a little money. And more than anything, I love it. So how do I take these HVA trades? I'm glad you asked. Did you know that there's a set of rules to use those lines? I'm sure you knew that. So the first way is with a momentum look. Any pullback to the HVA for entry. But the thing is, Papa, is in order to take that HVA trade, you have to have strong triggers, separation between the small and large. You didn't have it, so that's just a pink line. Has no rules associated with it. The other way to use HVAs is from a termination condition. So if the market reaches a termination condition, let's see if we get one up here. So right here where the market reaches a termination condition, if you had room to trouble, a pullback to the pink line would be an entry. And believe it or not, you guys may find this crazy, there's a set of rules for that too, and a checklist for entry. So Papa, HVAs are used either for what we call the HVA trade, catching tops and bottoms, or for what we call a momentum trade, where you have the strongest triggers and a little snapback to an HVA line. Those are the other two trades on the plan that I dropped in the room. Yeah, it's hard to see the perfect trade and not be in it and not feel like you have to find a way to get in. There's a point where it's just not my money. Miss Marika, triggers wide, 2 of the 4 triggers through, pull back to the area inside of triggers, and absolutely beautiful. Marika, great job. Effortless. Marked improvement from yesterday. Nicely done. Triggers are trying to roll up. Absolutely. Strong side. With strong triggers, you are so late on this momentum trade. Trina, you are 8 points late on a momentum trade. And you're right, there is momentum. And you're catching it on the way up, and I'm so glad that it worked out for you. But that 91, that 83-ish, that's where the magic happens. That's where the risk is low. Up here at 91, you've got approximately 13 or 14 points of risk on this trade, hoping that momentum carries it up. Does that make sense? Great entries create manageable trades. They really do. And with that momentum and with the room, it all works out for you, and I'm glad that it did. Wouldn't it be awesome to be in at 83 and getting paid at 99 instead of getting in at 91? And it looks like you lost 5 points, right? So you got in at 91 and they pushed down and took you out for oh my gosh, $500 loss. 86 to 91 is $500, $2,000 loss. No loss? Did you go short there? I see 4 in at 91. I see 4 out at 86. Was it 4 in at 86 and 4 out at 91? Either way, it's negative equity. Am I reading this wrong? Did you exit a different trade here? Because I don't see an entry. I see 4 in, 4 out, and then I see 4 in again and 4 out. So I see about $2,000 worth of loss here, and I see about $2,000 worth of win here, which means that I see net zero on the 2 trades. I could be wrong. It's hard to tell on minute bars after the fact. Let me know what you came up with on that one. But great entries create manageable trades. Triggers are down, strong side, room to trouble. Pull back to the 1-to-1s. There's your close below. There's your entry. There's target 1. I love it. And then there's target 2. Absolutely beautiful trend trade. Absolutely beautiful trend trade. Nicely done, Miss Trina. And then Miss Lucy, I bet I know what these are going to look like. And then Papa had one more. It was wrong annotating, Trina. I'm not even looking at the annotation on this one. I'm looking at the ins and outs. I'm just doing equal opposite reaction. No worries. But either way, if you went long 4 at 91 and out at 86, you lost 500 per contract. And if you went short at 86 and were out at 91, you lost 500 per contract. So no matter what the annotation says, that's a $2,000 loss. And then this was definitely a long, and you're out higher, and that's a $2,000 win. So you might be up 40 bucks between the two trades. But after $5 a turn, that's a net zero existence, which is okay. No harm done. You're working on figuring out a stop for jump the fudge in. Right on. So probably not in the bar that hasn't finished printing. And this is where patterns, guys, this is where patterns are so important. Why? Behind the large triggers is just an area that can create a bounce, right? That could create a bounce. That's a silly place for a stop. With strong triggers, that's just a momentum trade-off in HVA. Well, that doesn't make sense for a stop. If it doesn't just keep going up, you either have to hide behind something or at least let the bar print so you can see where the highest concentration was, and maybe you hide behind an HVA. It's a jump the fudge in trade. I'm going to let you figure out management. So as you go through and write things down, feel free to present it. I'll do my best to help. But I clearly don't know your risk tolerances, so I can't write the management plan for you. But I will give you my 2 cents if presented. The one I missed, waiting for the pullback for a while. Up, strong, pullback. There's the entry. You get in, and it almost hits your target. And I love this. You don't panic and let it hit your target, Lucy. Nicely done. Stinks waiting for a pullback for a while. But they almost always happen, don't they? That's the same trade. Did I click it twice? Or did you post it twice? Entry bar, pullback to area stop. Also, my previous trade, exit, this is the bar, 49. So you're out at trouble. I like this. Good management, right? It never got below that pivot where the market shouldn't go. And you trusted the large chart from the strong side of the triggers to get to trouble. That's hard to do. Nicely done. And then when you guys are looking for stop placement, when you're holding for those bigger moves, there's your initial stop, right? And when there's another fight, Lucy, and a failure, there's your new stop. Does that make sense? You had your initial stop perfect, and then once you get another fight and failure, that's a great place to reduce risk a little bit. Awesome, awesome trades. Nicely done. Triggers up, room, price pulls back to the 1-to-1s. There's the close above, and man, it just doesn't go, does it? It just doesn't go, Papa. See if I can make that bigger. 1250. All right, so here we go. Papa, you're going to dig this. That right there, strong triggers, pull back to the HVA, to those 1-to-1s, that's your momentum trade. That's the second trade on the plan. And you can see that they never really get below it. But if you're in right at that HVA, man, you got room to make some money before anything changes because of all the momentum. That's the momentum trade. Strong triggers, pull back to the HVA, pull back to the 1-to-1s as long as they're strong. And this one still fails. But if you're in at, what was the entry for that? At 98, and it goes all the way up to 18, you're 20 points in the good. I have to believe you would capture a little bit of profit on that one. Does that make sense? That's a good look, how to use those HVAs. And honestly, that was the first one right there, where it breaks up and pulls back, and it never gets below the zone. Below that zone, because you have 3 areas for a momentum trade right there. You've got 3 areas that can all behave as the momentum trade. Stop would go 4 or 5 ticks behind that zone. And then when it gives you another momentum trade, you can use the bar. But the challenge with these trades, and it's hard to trust that, right? That's terrifying. So we jump in up here. Well, it's above the small triggers. Yeah, but that's not really a trend trade, right? Not until the pullback. Not until the close below, above. And then one of the things you guys can do, and I think that we forget that we're in charge. If my rules are met for a trend trade, and I've got $400 per contract risk, and I'm just not okay with it, I don't have to take it. So sometimes you'll get these entries that are like so far away from where the trade originates. You might say, oh, gosh, I'm just going to wait for a better one. I'm just going to wait for a better one. But when you've been waiting for this one for so long, it's hard to have that. So it's the right trade. It just didn't work. It failed quick. It failed quick. But it is the right trade. Good job, Papa. All right, that's all of them. Let's see what the market's doing. So the NASDAQ is up. I've got nothing but room to trouble. Everything says up. So in order to take a trade, I would need a pullback to an area with a close above the small triggers. And if that happens, I've got to make sure that I'm not trading into something on the large chart. Does that make sense, everybody? That's how we gauge it. This is where we're at right now. And then for you momentum traders, you would literally, because of strong triggers, have a limit order waiting just above, and your stop would already be in place. So that's about $290 per contract on that particular momentum trade. And because there's no longer separation between the small and large, I take that one off the table. Because in order to take a momentum trade, I need a gap between the small and large. I must have momentum. And when the smalls return and there's no longer a gap, I no longer have that advantage. Does that make sense, everybody? Triggers are up. We just reached all the things that could create a bounce. Seems like a pretty good idea to sit tight for a minute, doesn't it? I'd say it almost feels like common sense, but none of us are that common with it. I'm not. Triggers are down, but from where the market is trading, there's absolutely nowhere to go. Absolutely nowhere to go. And therefore, I'm not worried about a close below the triggers. Strong trending market on the S&P. No areas inside of triggers. Everything says up. Tons of room. This is that look-alike, right? I would need a pullback with a close below. One second, 10K. Let me find it for you. You couldn't find it right from the Nexgen. There you go. How to trade brackets and max contracts. I hope that's what you needed. If not, guys, if you're on TradingView and you're like just wondering, right? I wonder if there is a knowledge base. I used to have this saved to favorites in the very beginning. That's a good one too. And there is just tons on bracket orders there. Cool. There you go, 10K. I don't always know the answer right off the get-go, but I usually know where to find it. So even if I can't help you in my first breath, we'll find it on the second or third. So here's that look-alike, right? Guys, what direction is the trend? You guys tell me. I don't want to sit here and do all the reads for you. Are we going up or down? Cool. Do I have room to trouble? So if my small triggers roll, that's my first option, right? I already know about it. It's there. There's no guesswork. If my small triggers roll, that's the first spot that could become a trend trade. Does it mean that I'm going to get an entry? Of course not. There's the second spot that could be a trend trade. So right now, I've done all I can do. I can't do no more. It either sets up or it doesn't, right? I either get it or I don't. I know exactly what I need. I know exactly where I need it. All I need is for the market to help me out. Pretty cool, right? How is that for stress-free trading? That is some stress-free trading. There's crude oil. Why is rule number 2 so damn good? Because it keeps you out of trouble. Look at that. We're not the only ones that know about those areas, guys. No areas inside of triggers, and it's scrambling like eggs. Let's see if we get an entry. Guys, we're at the point in the day where we have an hour and a half, no pictures posted, no questions being asked. I'm just going to watch the market and see if it gives a trade. That's it. That's my whole goal. Triggers are back to an area. I have already highlighted my area. I know that it's there. I can see it. It exists. When the market reaches that area, I'm not just jumping in. I'm waiting for a close above the small triggers, guys. This is NinjaTrader, but this is the 15-minute, 1-minute look-alike. This is for you guys that hate change, but love the idea of minute bars. This is a little way for you to do it on NinjaTrader. If you're like, well, I don't have that area, I don't have that workspace. You do now. I just dropped it in the room. Isn't it cool? Let's put a box on where we knew exactly what had to happen. That's where we knew what needed to happen to take the trade. We are 4 minutes from that point. We are working on our 5th minute. Did you like that, Jen? That was my disgruntled I don't have that workspace voice. Says everyone says, Mark, if I could just watch you trade, I could be good at this. You all watch me trade, right? Humor is good. It should be. There's enough stress that we put on ourselves. There's enough self-imposed stress. You got to smile every now and then, guys. They're getting closer. Time remaining. Down here in the bottom right, it's built into the workspace 10K. And if not, there's probably an indicator in there that you could use. On the bars, maybe. I'm not sure if it's on the indicators. Uh-oh, hold on. We're there. So what do we need now? We need a close above. Need a close above. But 10K, it is worked into the workspace for you. It's already a part of it. It shows it on both charts. I'm not completely sure how John Novak got it there. He's so much smarter than I am. He says, here, use this. And I say, okay. It might be under data series. I don't want to miss my entry. Let's see if there's a clock. I bet there is somewhere. Just have to figure out where it is. Uh-oh. 6 seconds, guys. Are they going to give it to us? 4, 3, 2, 1. Well, that's not a close above small triggers. So now we wait again. We have a whole minute to just get to know one another. What's your favorite book? What'd you do for spring break? Do the KISS rules for the lookalike strategy allow HVA lines to be in the way? You know what, Don? I've never mentioned them. If I don't have any rules for short or for short trades, that's just a pink line on a chart. This is a great example, right? It's just a pink line. Now, I might say to myself, that was a pretty big concentration of sellers. Maybe I'll make a couple bucks there. But no, there is no mention. HVAs are used for entry. Look at that, guys. Another one that didn't give us an entry. But did you guys notice? Double top doesn't show up in my rules, Jen. What if this bar finishes up? Is it really a double top? You've still got 7.5 minutes. Could we really call it a double top if it's mid-bar? We've got 27 seconds until we know whether or not rules are met, guys. 23 seconds until we know. Yeah, this is an active bar, Jen. If the market goes all the way up to that fib, that will never look like a double top, will it? Here we go. 1, boom. There's our entry. Stop has to go. Get down there. Well, shoot, we're already hitting targets. I'm struggling to move my stop. I am having challenges. I'm about to lose Ninja Trader, I think is what happened. Pretty cool though, right? We're already up 10 points. We've already hit 2 targets. Normally I'd be break even by now. And I definitely would have that target further off in the distance. But since I can't seem to move anything, let's just let it run out. What do you say? That stop is not in the right place, my friends. But when you wait for the right trade, things work out. Oh, there we go. Now it's trying to move. Stop it. Well, they got us out. We made money. I couldn't move anything. My screen was stuck. Still haven't gotten a full bar closed below, but it looks like they might be going to the next level. Do you guys see it? They closed above. We gave it a try. We made a little money, and then it failed. And now we got to wait for the next level. Same thing here. Pulled back, closed above. It went up 14 points. Pop of the difference is the zones. I don't have Fibonacci on TradingView. That's it. That's the only difference. When I opened it, may affect how market flow looks a little bit, but that's the only difference. There's your HVA lines, right? I had a fib here, market flow, or Chart Prime had it there. You had a zone above entry? I don't. That saved your bacon, Lucy. And Lucy, you're using Algo Alpha, right? So you're using a different one. Guys, every trade doesn't win. That one we managed to make some money on before we lost. That's pretty cool, right? And we drew the box. We'll see if they get there. Welcome to day trading. There's a lot of waiting. We're professional waiters. The same is true here. If I get a pullback to 61 here, you can see where the zones moved. And a close above, I don't have anywhere to go here. I'm directly into that 15-minute area. So you'll get different looks depending on whether or not you're using Chart Prime, which is a third-party indicator that is not Fibonacci, or if you're using the lookalike. So let's go over common mistake. Large chart's up, right? Large chart has room to trouble. I have not reached an area. And since I have not reached an area, even a close above the triggers is not a rules met. And Jen, you put the bad juju on here talking about double tops. I blame you for that loss. We still have 2.5 minutes on that bar. Crude oil's trying to break out. There's your S&P cranking down. That's it. They ran it up. Maybe they're going to run it down. Who knows? Cav, have a good one, man. Would need a close above right here. That would give 82. That would give about 10 points to come back up and test, right? But we've got 46 seconds until we know if the rules are met. Triggers are up. Ooh, did I just delete my Chart Prime indicators? I think I did. Whoops. Oopsie. Oh, that's S&P. I need to turn that back into the NASDAQ. There we go. That looks more like it. A close above 84 is the line. Your chart's all messed up again. Here. You may need to change the instrument, Trina, but that's my setup that we're looking at right now. That is large chart trouble right there. You're welcome. So just click on mine and go through and save that. So guys, if it closes here at 68, we have tons of room, right? Where's my buy button? We've got 12 seconds. They did, and every time I do it, it removes my VWAP. Still no close above. But here you go, Papa. I don't want you to feel like I'm holding out, so let's update this script. Boom. There we go. We're updated. Do it on this one. OG, what do you mean longs only unless it closes below the midband? Is that your rule that you made up? Change it to NASDAQ, Trina. If you want it on NASDAQ or gold. No, I don't have any rules that say that. Do you know how to do that, Trina? Just type it in up top. Thanks, Papa. I updated. Now I don't have anything here, right? So check it out, OG. Now we're pulling back to the mid-band, right? And from the mid-band, holy smokes, I got even more room to get to trouble. But I've got 51 seconds to think about it. Guys, I am like right on that mid-band. That mid-band is a moving average. I'm pretty cool with almost being there. Need a close above. I like it here too because look at that. I pulled right back to one-to-ones and everything says up. 30 seconds. What can we do in 30 seconds? We can see, oh, that one's in a mid-band too. I'll be darned. Should we take it on TradingView or should we take it on NinjaTrader? I don't care. The rules are the same. Because the small triggers roll, I wait for a pullback to the mid-band and a close above the small triggers. And I didn't get it. So we're still waiting, aren't we? What's up, Kim121? That's how I get them out of the rafters. All right, 46 seconds to think about it, my friends. I know, and I love it. Well, you haven't said one thing in my room, and then there you are, being bossy, telling me where to take it. I love it. That's what the room's for. Get what you want. It doesn't matter what I want in this room. It's like marriage. 22 seconds, guys. 22 seconds. 15 seconds. And Kim, the first one to speak up always gets what they want. That's it, Morgan. Your day 2 on TradingView? Yeah, no worries. Here we go. 2, 1. There's a close above. Stop goes below the pivot low. Because we're on the weak side of the triggers, we'll see if they want to make it up to the first sign of trouble. This is it. It's a pullback to the area. It's a close above. And now we are powerless. It's either going to win or lose. That's it. It's either going to win or lose. I'm not in control of that. I'm in control of whether or not I take that entry. And I didn't realize I was on a 10 lot. Doesn't matter. It's the same pattern. It's the same trade. Kim, does it make sense? These triggers are up. We're in an uptrend. There's room to get to trouble. We had to wait 23 minutes for a pullback to a mid-band. And it's the close above the small triggers that initiates the trades. Stops are placed below the pivot. Awesome. No, it will. And if you're used to NinjaTrader, you'll probably take about a week or two. About a week or two. No, Phil, they are down lower. I just don't have anywhere we're at. I just updated the script. Here, watch this. 1, 2, 3, 4, 5. You guys want to take half off? In at 52, we'll get out at 62, which would be, there we go. There's $1,000 in profit. Because we're here to get paid, right? So could we go $1,000 in profit and then break even? And then they either go or they don't? And there's $1,000 in the bank and who cares what happens next? Or do we just keep our stop where the market shouldn't go? Because this is an exercise in learning how to follow a plan. Around 10:28, when price rolled inside the triggers, you're still looking for longs. I'm not sure which chart you're talking about, OG. Help me out. Let me know what you're talking about, my friend. I don't have any rules that say price inside of triggers. Man, how easy was that? A tick off of our target. Is there any reason to risk money a tick off of your target? What do you say we just lock in 1,000? Worst case scenario is a $2,000 trade. It either hits it or it doesn't. Are you talking about right here? Are you talking about the large triggers on the small chart? Oh, they hit it and didn't fill. I am definitely not leaving any more risk on that trade. There we go. We'll take it for $2,000. Help me out, OG. Are we talking about right here? Are we talking about over here? All right. So do you see the trend is up? You cool with that? I'm going to go through it piece by piece real quick. You just said large chart. That's okay. So what do the rules say? Let's do this. You're going to love this. So the large chart, we're going to annotate our trade. Large chart, small triggers up. Only looking for long trades. Large chart, room to trouble, so I can make money. That's why I'm here. So, OG, I want you to remember this because you won't worry about the other stuff. Because the small chart triggers rolled down, I must look for an area that is lower for my entry. When price reaches that area, I will enter with a close above the small triggers. So what we're looking at, OG, is this is the fight on the small chart that says, come on, the trend is up. So let's do this. The trend is up on both charts. That small triggers roll-in is not a negative. That small triggers roll-in is 100% positive. That's the fight. That's the retracement that takes us all the way back to the midband. And then the hope is that when it gets to an area, that's the first part of the rules, that they resume the trend. And they did, to the tune of about, let's see, from our entry at 52 to 71, almost 20 points. Does that make sense? So the small triggers rolling down is not a negative. The small triggers below the large triggers, hell, the large triggers don't even work their way into the trend trade plan. And do you notice on the large chart, and this is the most important part, on the large chart, nothing changed at all. Through all of this price action, the whole pullback, absolutely nothing changed on my large chart. That's why we look to the large chart for advantages. And check it out. OG, from the point of rolling, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 16 minutes until rules were met. 16 minutes of calm. 16 minutes of patience. 16 minutes of trader freaking bliss. Because we knew exactly where the trade comes from. We knew exactly what had to happen when it gets there. Pretty awesome, right? Do you see how your brain is going to try to make you overthink it? How your brain is going to start throwing things in there that just don't matter? Brains they're pains and butts, guys. Your brain will do everything in its power to ruin your day, to make it more difficult than it needs to be. Great. Now I'm singing the song. I mean, that was a 10 lot, right? Obviously, most of us aren't trading 10 lots. Some of you might be. But that was a $2,800 trade on a 10 lot. Most of you are trading. They're all down here, Jen. I just ran the update. I'll try to reload it. I'm working with what I have in front of me. I still only seem to have them down there. And guys, we're still up. But we have to get above large chart trouble. And I just don't have any areas there. It's okay. OG, we all learned that lesson. And that's one of the reasons. And Don, I think I missed your second chart. Don, don't let me get away with that. Please, guys, if I miss a chart on you, do not let me get away with that. But this is going to be a good example. I got you, though. So before we do the read, actually, we'll do the whole thing. Small triggers are down. Rules say only short. Awesome. Price is on the strong side of the triggers. This may produce bigger moves, but for now, my goal is to learn to recognize and take proper entries. I love it. Plenty of room to the blue fib. You have room to make money. So, OG, those large triggers mean nothing for this trend trade. That background color means nothing for that trend trade. And guys, that's why when you look at my charts, they don't have large triggers or background colors. Small triggers roll up. Price pulls back to the midband, closes below, and Don makes a metric shit ton of money following the most simple basic trend trade ever. Don, it's pretty easy when you keep it that simple, isn't it? It's hard to do, though. Did you guys know that I've taken a phone call from somebody that was mad as hell that Nexgen only had 3 rules for a trend trade? It's almost too easy. And he told me point blank, he goes, Mark, it'll never work. You guys will never be able to only follow 3 rules. Look at it. There it is again. And if you were on the lookalike, Don, your entry to trouble was huge. That's a 50-point move. That's a 50-point move on the lookalike. Pretty cool. But guys, you've been lied to. If you have been with other companies and and they've told you that you need 7 time frames and 27 patterns and all that stuff. Yeah, you can do it. I'm not that smart, guys. I used to draw on people for a living. I love patterns. Patterns are good. But that's the box that we drew at 10:30. The entry was at 10:50, 10:45. Isn't that phenomenal? To be able to call your shots, to take a trade that you can prove wins more than it loses, and then just to simply wait for it to come to be. This is where I drop my microphone. Tell you to go buy software if you haven't. And guys, I'll be back in about 5 minutes. I'm going to go stretch my legs. Crude oil can't get anything done, guys. I'm going to close crude oil out. Don't even have to look at that one anymore. They are stuck like Chuck. S&P has odds favorable momentum and a clear path. And there's one area. Oh, not anymore. Dang it. You guys watch the S&P run. I'll be back in 5. Let's finish strong. Triggers are up. Room to trouble. There's our area. Does everybody see it? That is the only spot where a trade comes from. Pretty cool, right? You guys remember when we put a circle on where we decided where it had to come from until it happened? This is what having a plan does for you. This is what knowing your rules does for you. The hardest thing you will ever do is nothing. The most difficult part of trading is sitting still when your rules aren't met, guys. Here we go. Here we go. Whoa, look at him go. Look at him go. Man, that's a big bar. Make sure we're a 4 lot, not a 10 lot this time. All right, so Kim 121, it's the exact same thing. Triggers up, room to trouble. Because the small triggers roll, I need to pull back to an area. Because the small triggers roll, I need to pull back to an area. The area is different on TradingView than it is on Ninja, but the rules don't change. So on TradingView, that's my spot. On NinjaTrader, that's my spot. And if it doesn't hit that one and give me rules met, it's that one. So nothing to do yet on TradingView. Do you guys see it? Now here's the challenge. Some of you are just going to put both of them up and say, I'll take whichever one gives me the entry. And that's cool. That's your right. If I get a close at 25.42, I'm not taking this trade. I refuse to put $700 per contract on a trade directly into an outer band. Just not going to do it. Absolutely, positively refuse. Can't make me stamp my feet, hold my breath. Triggers up, transition, clear path, pull back to the area, close above. I'll be damned, Paul. That's a pretty trade. Triggers down, transition. Is it trans or strong side? Kind of iffy on both. There's the pull back to the area. There's the close below. You said that zone wasn't there in the moment. You get paid. And then you were stopped out. And if you had not chickened out and left the original stop in, you were in the money, right, Paul? Guys, where the market shouldn't go. Look at that. Where the market shouldn't go. Cost Paul $400. Triggers up, weak side, pull back to the area, close above, still resistance, not a long trade. And then you did it anyway. And it just craters all the way down, Paul. Stopped out for a big honking loss. Prairie dog. Does everybody see it? Paul, do you see it? I see you posting a bunch. I want to make sure. Is this after the fact? Yeah. Guys, that's that one that we talked about. And then, Paul, it pushed you back into that zone, didn't it? And it doesn't look like it ever got out of it. That's 1,180 that should still be in your wallet, my friend. Triggers up from 22, 25, 122, 25, 122. So we're up here. Market pulls back. Never gives the entry rules met, Paul. You did not get a close above the small triggers. Give me a sign that you see it. Never got a close above the triggers and just wiped you out for 1,300. Not a bad day. Days are 24 hours long, Paul. That was a weak moment in a wonderful day. That's a fixable mistake. That's an avoidable mistake. That's an avoidable mistake. But if you don't make that mistake 20 times, you don't know what you're looking for. Triggers up, room to trouble, pull back to the area, perfect entry, quick profits, and out break even. Nicely done, Paul. Did not keep the stop where the market should not go, paid in profits. That is a very common story. Hey, look at that. We made it to support. Paul, great trading. 2 very avoidable mistakes. So now your job is to write on a piece of paper. Don't take the damn prairie dog. And close on the right side. Have a good one, Alex. Thanks for being here, bud. Your large chart reads are perfect. Your patience bone needs just a little exercise. Just a little. Good stuff, man. Good stuff. I don't know that they're going to give us the entry, guys. We got 12 seconds. Somebody better start pushing up, don't you think? Someone better start pushing up. 4, 3, 2, 1. Not my trade. And now we have to wait a whole nother minute. Are there any questions? Any concerns? Any strongly worded emails to management? Why do we wait for the close on the correct side? Because small triggers are immediate strength. I don't care if you're on NinjaTrader lookalike. I don't care if you're on TradingView. Small triggers are immediate strength. And guys, there's the bottom of trouble. And if you get a pullback to this mid-band and a close above it, you're directly into trouble, which means that you don't have a clear path, which means that there are no rules met, which means that there is no trade from that mid-band, which means the market would have to come all the way back here. It's the same concept as triggers at a fib. Will you give me a bigger thought on that, Don? I'm not sure what you're saying. And it probably makes sense in your head. Same concept as triggers at a fib. Waiting for the small... Well, we're not waiting for the small triggers to roll up, right? Because Boaz, if I take an entry from the mid-band, it's directly into trouble. Rule number 1 not met. Do you see it? That green dotted line is the bottom of that zone. That breaks rule number 1 100%. Does that make sense, Boaz? Just know where to go. Big brick wall right in front of you. Now over here, I've got a little room. Different platforms, different looks. Mid-band here would still be okay. And if it keeps pushing, I don't have anything till 980. And if I got a close above right now around 80, I've got almost 27 points to get up to trouble. I'm with you now, Don. It takes me a second sometimes. Still have 13 seconds. 10 seconds. Are they going to push? 8, 7, 6, 5, 4, 3, 2. No trade. So we're going to go to the Nathan show. Isn't that cool? No close, no trade. How easy is that? All right, divergence still counts, so you're calling it 3 triggers through, weak top, don't have strong triggers. There's a lot of reasons not to take that trade. Can't we agree, Nathan? Nicely done. Great job. Triggers up, not quite the gap theory. So you get one push, that's your best entry. There's your second push, and then that divergence gets you out. So here's one of the things, guys. The same trade setup 3 times in a row, the first one is always the best. The first fight is almost always the strongest. If you see, oh man, my rules were met, well, I missed the first 2, I'm going to try and take the third one. It's just, they're losing steam. Look what happens. Strong triggers, now the smalls are below the large, right? And now we're getting more divergences. It gets progressively worse. Now, if your rules are met, feel free. But you can see it getting progressively worse. The first entry is almost always the best entry, which is why we don't hesitate. Beautiful trade. Momentum, didn't quite get there. Perfect entry, beautiful stop, money made, out. Third divergence is your exit, right? Didn't even have to be break even. Third divergence was your exit. Maybe a tick or two better, a couple extra bucks in there. Great trade. Odds favorable, clear path, both targets. Odds favorable, clear path, both targets. Great trade, great trade. And then you take this one and it's one target break even. Does that one make sense? Same thing, right? The further, the deeper you get into it, they're getting tired. The buyers are like, crap, I need a Twinkie. Something's going on. Beautiful, beautiful. But Nathan, if you made 600 here and only 100 here, are you upset about that 3.5 minutes of your life? Not at all. Gap theory. Has nothing to do with the push down. Price hit the mid band. Dude, they were either at or below. There's no doubt in my mind. It's a moving average. These came up 5 ticks while that came down 5 points. No doubt in my mind. It's great entry. But Nathan, I suspect that you knew that, or you would have been in over here on the way down. You didn't get in on the way down. It started up and you said, oh shit, I'm supposed to be in this trade. You got to slow it down. Why would you create an unrealistic environment to trade in, right? Practice like you want to play. You're not trading the market at 50 times speed. And if this was replay, why didn't you take it? You know it's perfect. Why didn't you take it? No momentum. I don't know if you took it or not. Triggers weren't flat. So it was 4 up. Looked like it was starting. There's your entry. I don't know what this is. That was your entry probably. There's just nothing happening there. Okay. Right here, right? So look at the difference. Cool. So why didn't you take it? Why didn't you take it at 85.25? Why did you let it print divergence from a 1-to-1? Why did you let the small triggers get below the large? Why did you let the large roll against you before you finally decided to take that trade? Why didn't you take it right there where everything agreed? Okay. They were red where you entered too, weren't they? Okay. Well, then you followed your rules. Good job. It does look terrible now. Absolutely, it does. So right here, the triggers were up strong. You took your entry and it didn't work. That happens. Cost of doing business. If it was right in the moment, cost of doing business. Triggers up, weak bottom, great entry, doesn't work. Followed your rules, so I am successful. I love that. Nathan, from a weak bottom, what's one of the things that happens at that mid band from a weak bottom? I'm not telling you to go outside of the KISS plan, but I'm telling you it's about time to start recognizing that. I'm not telling you to... Okay. I like that question. I'm not going to write your plan for you. I already gave you a plan, right? I already gave you a plan. Hold on. Give me just 1 second. That's Nathan's plan. From strong top or bottom on the 13-2, mandatory, not mandatory, but better, right? So we're not worried about it so much. Hold on. So you would put... maybe even not there. How's that? If it's a weak top or bottom and it's right at that mid band, I'll wait for a reversal bar. One of those times where it's appropriate to wait for confirmation. Because my patterns say, my pattern recognition says that from a weak bottom, the mid band is more likely to create a bounce. I don't want to skip these trades, but because I'm in charge of my life and my trading, I will demand a reversal bar in the direction I'm going for confirmation. That's it. That's it. Nathan, you'll have to decide what at the mid band means. You'll have to go back and say, oh, look, my large triggers didn't make it through the mid band. I'm at the mid band. You may have to go back and say something. Oh, look at that. The entry was below the mid band. The mid band never broke. I'll be damned. Let me find it. At the mid band, right? From a weak bottom, there's a bounce. At the mid band, from a weak bottom, there's the bounce. From a weak bottom, that's at the mid band area, right? And you even have fibs to help you. So if I'm trying to figure out if it's at the mid band, couldn't I do something like, I'll just pretend the mid band is a fib. And I'll let the triggers break it. I'll get to the other side of it from a weak bottom before I start looking for trades. You're welcome. So Nathan, do you remember when we said you'll ultimately write your own plan? what you're doing right now is now you know the plan. And this is the natural progression. I know the plan now. I know exactly what it looks like to take a high probability trend trade. I know exactly what it looks like and what the best way to take a medium probability trend trade is. I know exactly where my entry goes. I know exactly where my stop belongs. I'm no longer struggling with a chart read. Is that fair? Absolutely it is. I've watched you progress. It's amazing. Trading plans are not cast in concrete. Trading plans will change as you trade, as you change. My goodness. So Nathan, you're at a point now. How many times have you seen a mid band ruin your trade because it came from a weak bottom? And I know you don't know the exact number. You might. You love statistics. Okay. Well, Nexgen's plan is kindergarten, dude. Nexgen's plan is kindergarten. This plan's designed to teach you to read your indicators, Nathan. This is not the end of the road. But if you're going to alter it, you've got to go through and you've got to do the research, right? And if you just want to keep losing this trade, then keep losing the trade. But I'm telling you, from someone that sits in a place where they've seen this fail hundreds of times, I don't take this trade without confirmation. Why don't I put it in the plan? Because I don't want you yahoos overthinking everything. But guys, you've got to have a willingness to break outside of your plan. And look at this. Now it's a strong bottom. And now it's odds favorable. And it's into a divergence high. But now that mid-band's probably not going to be much of a problem. The divergence high might be a problem. But the mid-band, F it. I'm from a strong bottom. Does that make sense, Nathan? And if that divergence wasn't there, you couldn't stop me from activating a limit order. But right here, it didn't make sense. And right here, it didn't make sense. And right here, it didn't make sense. And right here from the strong bottom, it broke like a mother scratcher. And from the weak bottom, it created a giant untradeable bounce. And from a weak top, it creates a bounce. Do you start to see the pattern? Cool, right? And from a weak top, holy shit, another continuation. And sometimes it doesn't work. But we're looking at what happens more than 51% of the time. And I feel comfortable saying that from a weak bottom, more than 51% of the time, that mid-band creates a pretty gnarly bounce. Weak top, gnarly bounce. Weak top, gnarly bounce. Weak top, gnarly bounce. Good top, strong top, broke right through. Weak bottom, there's a bounce. Weak bottom, there's a bounce. Weak bottom. Well, finally went up and then didn't continue. Does that make sense, Nathan? So if you are not interested in going outside of that KISS plan, ignore everything that I just said. If you want to grow as a trader and make it easier and avoid a couple extra losses now and then, start paying attention to the patterns around you. And they're just observations until you write them into rule. And then Nathan, once you write them into rule, that is your Bible. That is your cast in concrete plan for execution. So if you're not comfortable doing that, keep taking them. That's your right. They just got to the wrong side of everything, didn't they? Just got to the wrong side of everything over here, guys. Just got to the wrong side of everything, which made this a very difficult trade to take. Do you guys see it? Mid-band behaved as resistance several times, a couple times. Trading directly into it doesn't make sense. Why would I believe that the third one would work? This is just one of those not my trade moments. Nathan, you're a rock star with the KISS plan, brother. Don't abandon it if it's working for you. Don't abandon it if it's working for you. But this goes back to the conversation that we had. If you followed the plan 100% to the letter, and you know that you followed your rules, what do you want me to say about it? You're literally asking me for feedback. If you just want high fives, brother, say, Mark, when I do it right, high five me. Don't give me anything beyond the basic KISS. But if you drop in my room, man, I am naturally inclined to give you everything in my head. You like to see the red trigger almost close on the way up. Boaz, I don't know what that means. Right here, where it starts to roll, you might take a shot. Cool. It was still directly into a zone. I mean, look at that. The zone held. The zone held, right? Rule number one wasn't met. No matter what you like down here, if you're following the basic plan, it just wasn't met. But you're right. That's a good chart read. It tried, and the triggers were strong down. And it tried again, and now the smalls are above. And it tried again, and now the smalls are above and the large are above. That big green box right there, it was red. You didn't have any room. Does that make sense? That's the bottom of the zone. That's what it looked like. It just kept banging its head against it. And it did ultimately break. These are the ones that people lose 2, 3, 4 trades in a row. When they could have just sat still and waited for a moment. I hope that makes sense, everybody. Triggers are still up. Now we have a clear path. So Boaz, we would do the exact same thing. I don't want to enter below the top of that zone. Papa, that was your momentum trade off the HVA. No, it wasn't, because the HVA wasn't there yet. So that's not a momentum trade off the HVA yet. With the strong triggers, that would be the momentum trade off the HVA. I'm willing to give it about that much room. So guys, you momentum traders aren't waiting for it to go back in the direction of your trade. You're literally saying, come get me at this thing that could create a bounce. That's where I'll enter. Because I would rather have $110 of risk on a trade instead of $310 per contract. And they just didn't get us. So I just canceled my trade. That's what the momentum trade looks like. Momentum trades are hard to catch, Papa, especially for the new user. They're tough to catch. Well, Trina, they're still up everywhere and strong on my charts. Still up everywhere and strong on my charts. Your charts may look different. Mine are everything I teach about momentum. You said weak trigs, not trigs. Oh, weak side of the triggers. I got you. So the very basic plan says don't do it, right? Perfect. Good job. If I understand correctly, I break above small triggers here would have been a good to the upside long with the stop below where the market should not go. No. Paul, good question, man. Hold on. This is how we all have goldfish brains. I love it. So Paul, coming into support, right? Let's make it support. Let's use colors you guys know. That's support. Hold on. Does that make sense so far, Paul? When the body of the bar breaks below it, it becomes resistance, right? And it stays resistance all the way to there. So Paul, there's your what the difference bar. There's your what the difference bar. How many prairie dogs can you take and get your ass kicked until you see that the market actually went and you're like, well, that's the perfect entry? What's the difference? It's still resistance all the way through. It's still just a peak above all the way through, and it failed miserably twice. The challenge is, Paul, and this is for everybody, yeah, Mark, but I can see that the market went up this time, so that's got to be the right entry. That's human nature. I will completely ignore the other times it failed because this one appears to have won. Does that make sense, Paul? That's why we wait for the pullback. Because this fails more than it wins. There is no edge in the prairie dog. The prairie dog will lose more than it wins. It'll win now and then. No, it's not a nice entry. It's the same crappy entry as that one and that one. This one just happened to go. Just happens to be the one that didn't have herpes. There was no entry. The rules weren't met, not the way I teach them. Not the way I teach them. And then if you were watching it when we were looking at it too, Paul, every one of those prairie dog bang on the heads were directly into the bottom of a zone. We're directly into the bottom of a zone. So not only was it trading from resistance, it was also trading directly into trouble. Assuming you had the same zones. Sometimes it's just not our entry. And this is one of the challenges of looking at what the market did after the rules were broken, because your brain will try to convince you that's your trade. Does that make sense? You will completely ignore that it failed twice because this is the one that you saw go. So your brain says, dude, Paul, don't ever miss that look. That shit works every time. But it doesn't. So much so that Nexgen took 1,000 pictures and put together a plan to help you avoid that loser. But it means that you've got to be willing to let the market go without you every now and then if you're following rules. It's hard, right, Cam? Professional waiters. So Jen says, but what about the one that closed above it? Jen, will you show me your plan that says jump the fudge in because the bar closed above? Don't we still need a pullback and a close above? That's the one that made it support. That's the one that took us back to support, but there's no rules met. There's no rules met for entry. And if you jumped in right there, how do you manage that? Because the next bar pushed down. Does that make sense? It's so easy to look at what the market did after the fact and say, I could totally have made $1 bajillion. Whoops, look at that. They pulled back to support. Is anyone getting in with the close above that far away? I'm probably not. Sometimes it's just not my money. No matter how much I want to be in the market, sometimes it just doesn't fit my plan. Guys, I don't care if I'm on simulator. I don't care how much money I make on simulator. I can't do anything with it. What I'm doing is I'm building the muscle memory so that when I'm live in front of a market and I'm trading real money and there is payouts at stake, I want to do the same thing every time. Man, this is great conversation, Jen. This is what makes this classroom work. And it typically stems, the great lessons typically come from a misunderstanding. And if you don't post in my room, I don't know where your misunderstanding lies. That's why we do it. If you thought you were going to jump in because it was going without you, how many of you have regret in the moment? Oh, damn it. I wish I wouldn't have taken that entry because now they're pulling back. Now the immediate momentum is still against me. It's crazy, isn't it? Let's see what it does. It may go. And if it does, it's not my money. Did you guys know that we've had rules met once? One time since in the last hour. One time the rules have been met where we took that unbelievably sexy as all get out long trade. And then everything else has been professional waiting. Thank you, Paul. Does it mean that you can't take it if the rules aren't met? Do whatever you want, guys. I'm not here to tell you what to do. Most of you had parents to do that. That's not my job. I'm not here to tell you don't jump in. I'm not here to tell you don't take prairie dogs. I'm not here to tell you don't fight the trend. I'm here to give you feedback on your chart reads and answers to your questions, guys. I'm here to help you make the best decisions as a day trader. And when you post in my room, it does. And it typically runs out after success, Jen. It typically runs out after success. You guys follow your plans and you take these amazing trades and you keep winning. And you get sick of watching other people make money that you're not making. It's envy, right? One of the 7 deadlies. It's envy. Well, Pete took that trade. I'm going to start taking that trade. Well, you don't have 10 years under your belt like Pete does. That one doesn't fit the KISS plan. Phil should have never taken that trade. Don't be the trade police. Guys, focus on your trading. We all like different things. We all see different things. And until you can create your trades, Nexgen gives you a way to have a plan. When I was a personal trainer, I used to always hope that people would fire me, that they would get so good at working out on their own, that they would be so in tune with fixing their diets, that they just called me one day and said, "Hey, Mark, you know what? I'm not re-upping with you. I've got this." That's the goal. I'm a crutch. Your job is to find consistency away from that crutch. Fun stuff. Uh-oh. Odds favorable momentum. Clear path. Oh. Are we going to get that area inside? It is like right on the line, isn't it? If you are super strict by the book, absolutely no room for gray areas. That one tick keeps you out of this trade. I don't know what that large trigger is going to do if the market pulls down. I'm going to brace myself. Or I may say, because it's clearly outside, if it hits that area and starts up, I'll take a trade. Right, Jen? You took one of those earlier today. It's almost perfect. I'll force it to go in the direction of the trade. That's my right. I don't care if it fits your plan. You don't pay my bills. With that level of momentum, hell, Pete's already in. Pete already jumped in, and he's like, and if it pulls back, I'll take the trade. I got nothing but room. I've got all the momentum. The sellers are fighting. They can't get anything done. Let's see what they pull off. Some of you will say, if this bar finishes up, I'll just jump in and see if they want to carry it. Maybe that's what some of you are waiting for. Some of you already jumped in way back here, and that was your exit. That's cool too. Trading is this miraculous animal, and it's different for everybody. It's got to be your trade. It's got to be your plan. It's got to be your method that you've proven wins more than it loses. So when I hand you the KISS plan, don't take my word for it. Assume that I am absolutely, positively, without question, full of crap, and prove me wrong through study. And when you do that, good things tend to happen, don't they? Here, watch this. We'll see if we get a chili dog. If it closes, if we get a bar above that divergence high, I'll show you how people jump in. When there's momentum and path, I think I even have a chili dog. If there is momentum and path and the bar clears the bouncy thing, you'll see a lot of people just jump in. But look at that. The bouncy thing is creating trouble. Don't have this trade on a minute chart, Don. Haven't figured it out. Because that's what Ron named it. Because it is in small risk, quick profits, about enough to buy a chili dog. It was just a joke that went with it. This was created by a Nexgen user, and it says, with momentum and path, if you clear something bouncy, jump in and watch. I've got his ATM strategy in. Watch how tight it is. We need about one more bar up to clear that divergence high. Watch how tight the management is. Watch how tight the profits are. One more bar. Almost there. Momentum on both charts. Clear path on both charts. The back of the bar has to clear that divergence high or it doesn't fit the rules. Guys, he created rules and a checklist and a management plan for this trade. He doesn't just take it jumping in hoping for the best like most of you do. These areas can create bounces, and if the back of the bar doesn't clear it, this is what typically happens. That takes you out of the trade. Pretty cool, right? You will be empowered to craft a plan based on your ability to read the indicators. That's why we don't trade into lines. Now they'd have to push all the way down and create a trend trade. And the mid band is working its way right on the edge. It is inside. I'll go 2 ticks above. I'll put my stop 5 ticks below. Let's see if they give us a winner. Oh no, that's the chili dog. $100 risk. I'll take that all day. It's probably a little too tight. We'll catch it on the way up. 1, 2, 3, 4, 5. Yeah, it was too tight for the KISS plan. Maybe we'll take 2 losers. Who knows? With all that momentum and path, the hope is that the market hits the next key area. That's it. The hope is that all that momentum pushes it up until it reaches someplace that can create a bounce. If I get a reversal bar, there we go. 2 ticks below the reversal bar, 1, 2. If I wanted to split contracts, I might sell one of them at that divergence high where the market had a loss of momentum. We'll see what happens. If I get a third divergence on this trade, that's an exit condition. I'll move my stop 2 ticks below the reversal bar marker. By that time, I will know that the third divergence is printed. And if it never prints, I don't get stopped out. There's a little trick for you guys that will exit because of a third divergence. 2 ticks below the reversal bar, you will know that it's true. Large chart still has momentum and path, doesn't it? Let's see if it'll go. I'd love to. What's changed since entry? We got some up movement. We're starting to break above those small triggers. We're back above the synthetic triggers. Large triggers are still up. Momentum is overwhelming. Distance to trouble is astronomical. So now we're just waiting to see. I heard a beep. Was that me disconnecting somewhere? Oh, there's divergence. That's our exit condition. That's our exit condition. 3 divergences in the same price range. And that's why. Pretty cool, right? Pretty cool. A recognizable pattern that says the advantage is over. And look what that market is doing. This is why in the beginning, black and white works for most people. Any questions about anything that just happened there? Once you learn the easy stuff, oh, look at that. We're pulling back again. Let's see if it makes it. Once you learn the easy stuff, you're welcome to go to the hard stuff if you feel like you need it. You're welcome to have 10 trades on your plan. But every time you have a trade, you better have a management plan for it. If you take a high probability trend trade, you better be prepared to manage it like a high probability trend trade. And if you take a medium probability trend trade, you better be willing to manage it like a medium probability trend trade. When I have nothing else to do, could I tell you how to create a second set of charts for another instrument? You have NASDAQ up, but would also like to look at ES. So Kim, are you on? I'll show you the easiest way to do it first. Have you already downloaded the desktop app? Are you on the app? You think so? So if you are, you won't see browser tabs. It'll look like this. So if you want to add a chart, all you have to do is click the plus button. You have tabs? Okay. So do this. Let me go back and see if we can do this real quick. I don't work with the tabs. I would, and this is just me, I don't tell you guys what to do. I think this is 1,000 times easier. I think the desktop app is so much easier. And then you can have your internet off to the side while you look. So like if you want to play a game while you're waiting for your rules to be met. He loaded it for you yesterday and today it's gone? That Chris. Do this. Do Trading View. Type it into your search bar real quick and see if the app shows up. Maybe just the shortcut went away. That's how I always check, just to make sure. Let me know if it shows up. If it does, pop that bad boy open. If it doesn't, I dropped the link in there for you to go download it. But what we can do is I'm going to copy that link for my workspace. Cowabunga. Did you find it? Man, I'm smart. Cool. So Kim, here is my workspace. And what it is it's an exact replica of what you see in front of you. So I don't know if he did it for you or not, but if you click right up here, so are you looking at it right now? I don't want to get ahead of you. Okay, cool. So right here, see the little drop down where it says Manage Layouts? Do me a favor and just click down. Do you have anything in the recently used? You should. I can't imagine that he built it from scratch and then didn't give it to you. Because what we can do is punch that little plus button and it adds a new tab. You've already got it. You didn't even let me help. You're such a strong, independent person. No worries. So I'm just going to open the new tab and click on that layout, and look at that. It's right there. So this built the NASDAQ because that's what that was for. You can either add a symbol and drop it in this list if you want. I've got these pre-made because I teach. Or you could literally come up here and click on where it says NASDAQ, type in ES. Whoops, you could type in gold, right? You could type in feeder cattle. You could really do anything you wanted to do. And then once you change it, so we'll make it gold real quick, bunk. Now I've got a gold chart, and then I just have to come over here and make sure that my 1 minute chart is a gold chart as well. Because I have made the mistake of 2 different markets and drove myself nuts trying to figure out why they didn't line up. And that's really how easy it is. And then when you close out, every time you open, it'll bring you right back to good.